Thank you, Mr. Sethi, for giving the introduction. Right, and my name is Sonjai Kumar, and currently I am a Joint Secretary of Risk Management Association of India, and on a work front, I am independent risk management consultant. I worked 25 years in life insurance sector, and prior to this I was in Aviva Life Insurance working in the risk management department. Risk management is very close to my heart and we are doing lots of things to develop risk management in this country, and that is the reason why that we have set up this Risk Management Association of India, so that people can come, stand and deliver onto that platform. So that's about me, and if you have any questions, it is given. In the end, there is a my contact detail is there. You can always contact me, right? So Mr. Sethi has set up a very right tone of this of the day, which is emerging risk and liability insurance. And in summary, what he has said that over the period of time, things have changed. Things have changed for in last 2 decades when we were in the closed economy, and what used to happen outside world were not affecting us. But as the economy has got opened up, things have started changing, and it has started impacting the business, and that's the reason why that we have to keep an eye on the emerging risk. So if we look back slightly and looking into the context that the emerging risk, so if we go to say 500 years back and look at the development of the human, prior to the steam engine, the most powerful thing was muscle power. Prior to that, we always used to use either a bullock cart or a horse, or even the human used to pull, right? That was the power that mankind had. And then in 1765, then came James Watt, and he brought steam engine. And it is the steam engine, the power of the steam engine has transformed the world in a form of an industrialization. That was the first revolution that happened to this world that changed altogether totally. That was the first revolution happened, from muscle power to steam power. The second change that is happening now is a mind power, or you call it a digital power or a computer power. That's the second machine age is happening, when things are getting transformed from one platform to another, and the world is totally different now. The next world war will not be fought on the battleground. It will be fought on the computer. That is what it has changed. And the purpose of having emerging risk and keeping an eye on the emerging risk is that what is changing into this world. And that is why the risk is important. And when we talk about a risk, the first question I always ask, what is risk? Because during my working career in last 7-8 years, specifically into the risk management, and when I ask a question, what is risk? The answer immediately I get is, there is no risk. Then I further ask a question, what is risk? Then answer comes, I think there is no risk. Then you further probe and ask, and then you get an answer, in my opinion, this will not happen. And then in the fourth time when you ask, it will say, it has not happened in the past, it will not happen. So the point is, people don't understand what the risk is, right? And this is the fundamental question, this is a cultural question. And if there is a one question that is going to have the biggest challenge in this country tomorrow, is the risk culture. I'm not going to speak on the risk culture. It will take one full day to speaking on the risk culture, but that is one of the greatest thing, the risk culture is going to create. Now, first question first, what is risk? If we are clear about what is risk, and then we can understand what is emerging risk, and then we can understand what the day is, and we can understand what we are trying to do today. Is it just we are going to talk about the liability insurance, and it is because you have to purchase the insurance? The answer is no. The question is, what is risk? So I would like to ask, one answer, if somebody can define for me what is risk.
Anything which can adversely affect your financial condition or your physical presence.
Yep.
Anything that can adversely affect your well-being.
Yeah, exactly. So what happens that the way the physics is, the way the chemistry is, the way mathematics is. Similarly, risk management has its own language, it has its own music, it has its own grammar, right? And my endeavor is always is to simplify and put the things into a perspective. And so this is just the agenda of this thing. By speaking, I will not spend time on it. I'm just giving you two situations to define risk. In one situation, you're a person. In the morning, you're going for a walk, and you see that your tire is flat. In a second situation, you're getting ready for an office. When you come to the car, you see that your tire is flat. What is the risk in this? Yeah, situation is different. But what is the risk? Where is the risk? What is the difference between the two situations in terms of the risk? Right. I think you have hit the question almost there, right? In the definition of risk, there are two important things. If we know, those two important things, we can define risk, we can address risk, we can do anything to the risk. And once he has, said, I've just created a formula, right? Seems like it's slower. That's a risk. This is another risk, And what I do is that I always carry. Acha. Anyway. Okay. No problem. We always do risk management. What you can do is you can open your page, and you can look into that. That's what I do, the risk management. We will get to the page where it is written risk formula. Have you got to the page? Yes. Everyone? Right? So in the context of the previous picture, right, let's look at the risk formula. Yeah. So the risk formula has got two things, right? One is the future and another is the objective. Right? So these two things are the most important ingredients in defining the risk. Right? if any one of the two things is not there, there is no risk. All right? Now, let's go back to again to the question of, sorry? Yes, the situation 1 and 2, where the person, I said, going for a walk. In the second case, the person is going for an office, right? In the first case, the objective was the person was going for a walk. And whether the tire is flat or not, it does not matter because his park is nearby. And therefore, there is no risk, right? In the second case, his objective is he is going to an office. And if he does not reach office, his objective will get affected. And therefore, there is a risk. The demonstration was that it's the same situation. In both the situation, the tire was flat, right? But in one situation, there is a risk. In the another situation, there is no risk. That's the fundamental, the fundamentals of the risk management, and the risk is looking into the future and the objectives, right? These two are necessary conditions. Now, so next question is that going back to the formula is that we have seen objectives. When there is no future, also there is no risk. When there is no future, there is no risk. Can you define a situation? Because yes. What is this? It always happens, whenever I am doing a presentation. It has happened, I think, 4th or 5th time. So that was the first situation, about the objective. And I said that the future. When there is no future, you will always say future is always there. It's impossible because it is the future that creates the risk and the uncertainty. But there are times. Another example. There are two people here. One person is on a deathbed. Another person is young, dynamic. Both want to earn $1 million. Who has the risk? For which person the risk is higher or risk is there? Situation 2, absolutely. So I have done my first lesson right. You people have understood what the risk is, right? So the risk is, in the first case, the person is already on the deathbed. For him, there is no future. In that situation, there is no risk. So that's the importance of, what the risk is, the definition of the risk, because people generally think about risk, problem, issues are all same. No, they are not. Risk is always futuristic because that produces uncertainty and there has to be an objective. That's what the risk is all about, right? Let's move forward about the emerging risk. Now we understand what the risk is, and let's look at, because the objective of the day is the emerging risk and liability insurance. So in terms of the emerging risk, again, I'm going to the same formula. Emerging risk, future plus objective. Now the difference is that in future, you will have two situations. One is the existing risks, like the economy, the dynamics, the demography, that is not changing. So because of the variability of that risk will remain. That is the existing risk, I am calling it. But in a situation, there will be newer risks because there will be newer technology, there will be newer developments. So that's a new risk, and that's what the emerging risk is all about. Emerging risk is not from what the interest rate will change. The emerging risk is that what the technology will change, how things will happen. That's the new emerging risk is. So let's look at emerging risk from this perspective. So what are the new emerging risks that is happening these days, and what Mr. Sethi was talking about 2 decades and 3 decades back, and what we have today, and what the changes happened in terms of the future, in terms of the development. Let's see digitalization. So the digitalization has almost taken over, and that's where I was talking about the second machine age. That's where, you know, things are moving from paper based to electronic based. Because we are moving to the digital era, the way of theft have changed. Earlier there used to be burglaries. People used to go into the house. Now it has become simple. You can, you can go through the computers. That's what the cyber risk is all about. One more risk which is emerging, and though the governments are looking into it, but this is the only one risk that can wipe out the mankind, is the environmental risk. And perhaps as a country, as an individuals, we are doing least about it. The other areas which, I will take cue from Mr. Sethi's, that what are the other impacts which is happening is onto the individuals, like liability side. There is an impact because earlier you hardly used to hear about the product recall. We used to hear, in US one ship has been returned back, but now with the globalization is happening, we are not, we are part of that world, and this risk we have to, bear with us. As again, he said directors liability. Again, recently I saw the government is pressing hard on independent directors. So these are all the emerging risks that we have to keep eye on, because what is the objective? And that's a question I've written on the top. Can somebody tell what is the objective? Then only the risk will become. What is the objective of all these things? Sorry? No. Objective. We are moving. We have moved. We have moved from the paper world to this much of so much. Why? Why we are moving it?
To safeguard all these situations.
There is just a very simple one thing which, the human is made up of: the growth. What we want is just a growth. Right from, the old, thousands of years back, we have been, doing all these things for the growth. You are very comfortably sitting in the agriculture age. No risk, nothing, no cyber crime, nothing, but we are still doing it because the growth is there. Again, the objective, right? So that's the objective is. Now let's look at, one by one, and I will not spend much time because you have understood what the message I am trying to give. Others are, the further details of the digital changes that is happening. It's a driverless car, right? What does it mean? It means that the impact will be on the accidents, what the insurance policies will be, right? So this, and also it presents the opportunities. So wherever we have new changes happening, new development happening, there's always an opportunity. And if opportunities are not encashed, we are not doing well. Then the supercomputers, it is going to increase the speed, accuracy, precision, right? That's what is going to happen. And what all these things are going to do is going to change the jobs. The future jobs, if we look at in next 20 years, will have a very different skill set that will require, that it is what today is. Similarly, 20 years back, there used to be very different skill sets. People used to do MA, BA, etc. Now the things are changing. In next 20 years, things will change again. So in case of an automation, all the jobs are being done by the machines. It's robotics, thinking machines. So things are going to change. That's what the future is all about, and that's where the emerging risk is. We're going to enter into a very different world. That's where the risk will be, right? Again, spoken about the cyber, right? The only difference I see when I talk about the cyber security or the cyber crime is that it has moved from the physical world, physical, theft, physical, whatever you call it, to a cyber world, which is in a digital world. You pick it, any of the example, you will get the answer. Whether it is cyber terrorism, it is through the computer, or it is physically. That's the only difference. The human psychology has remained exactly the same. Nothing has changed. Only the modus operandi has changed. Environmental. In last 140 years, roughly 1 degree centigrade, the temperature has increased. And it is estimated if this is continue, right, the planet in next 100 years maybe, if we don't do anything, if it remain like this, it may be a difficult place to live. Environmental is a big topic in itself, and there are lots of impacts happening within the environment. Cannot be covered, in one slide, but this is just an indication that where we are moving. And recently, 2-3 days back, we had in the newspaper when it has been estimated that how the environment is changing. Liability, I think Mr. Sethi has already spoken about what are the impacts, that how the situation is changing in the world, in India, where the liability onto either the individual or to the institution or to the directors is going to increase. And that's where this need to be aware of. That is the emerging risk for now, because earlier it was not there. Again, directors and officers, coming into the same league. And as I said, okay, there's one more thing that this is a risk management process, right, which I want to, tell that whenever you're doing a risk management exercise, how you should do it. The first thing that you should do is in risk management is to identify the risk. And that is the reason said that what is the risk? If you say there is no risk, it does not come into this cycle. So that to enter into this cycle, there has to be a risk. So once you have got a risk, you have to measure it. What is the quantum of the risk? That's a risk measurement. Once you measure the risk, only then you will come to know out of the 1 to 100 risk, whether you have to address 100th risk or the first risk. That comes from the quantification. Once you have quantified, you have to measure it. You have to manage it. What you will do. You will purchase insurance, you will manage it, you will avoid it. What you will do. There are tools and techniques are there in the management of the risk. Once you're managing it, you have to monitor it, because the risk and the mitigation, with the time things changes. It's dynamic, therefore you have to monitor it. And whenever this exercise is done, there is always a risk management committee that need to be reported. So this is a process of risk management. It is applied anywhere, everywhere, wherever risk management happens, right? So I think this is what from my side on emerging risk, right? These are my details of the contact, and I'm too happy to address either individually, personally on this forum. Any questions? Please. Thank you.